Hey traders, this is Jeff from Zen Trader, and I was supposed to have this video out over the weekend, just did not have any time. My wife had all kinds of stuff that I had to attend and visit, but it was good. It was a good weekend, so I hope everybody had a good weekend as well. This is going to be pretty quick. I just wanted to talk about what the markets did today and why I decided to start buying a few long ETFs. My market timing system is still bearish, and but we hit some extreme levels today. Now I have little smaller timing signals within that kind of tell me when to trim positions or maybe add to a new existing position. So I got a bullish signal today that I don't normally take on an intraday chart, but because we hit some extreme levels on the primary, and combined with, if you look, this is over the last month, 2 months. You know, I had a bearish signal here, made money on the way down. A bullish signal here, even though it had a little bit of a hiccup, I made money on the way up, and then I got short here and then ended up selling out here. So I've had a little bit different of an experience than some investors or traders, so I feel that I can take a little bit of risk, I guess. I would not advise this trade for somebody who maybe doesn't have a little bit of gains to play with, I guess, because it's not necessarily the best strategy. But and my positions are by no means a large part of my portfolio. I just kind of bought some diamonds and some Qs near the close today, and one other small little stock. So that's what my system is saying. It's still bearish, but I think that it's might be at the extreme, and maybe we're gonna bounce a little bit here, and that's essentially what I'm trying to play. Okay, let's see. I wanted to show you this chart. Every day, every week, you should be trying to learn something. You should be taking some screenshots, writing some notes on that. And so what I wanted to, I saw this chart over the weekend, and I wanted to share this. Basically, the market had been trending here between these 23 and 2260, and when I got short here, like I said, I ended up covering right around here, I think, and that was kind of a big mistake because we collapsed out of this range, and I had been, like I said, I have been short from up here, so I was kind of more than happy with a 100+ point drop in the NASDAQ in a little over 2 trading sessions. Not even, about almost a little over 1 full trading session for me. Got in the end of the 9th, got out the beginning of the 11th. So I was happy with that, but looking back in retrospect, if you look at this drop, the distance, I should have known that there was more downside coming, and here's why. Because we were in this trading range. Oops, sorry about that. We were in this trading range, and basically the market had made up its mind. Okay, this is what it's going to do. It's going to go down. And there was a lot of pressure with this gap down. I should have realized that we were going to have another little mini leg down. No big deal. Essentially, you know, out some gains that I could have had. But, you know, when you see a range, a consolidation range, and then this kind of pressure, gapping up or gapping down, take a look, measure it, and, you know, maybe trim a little here and then sell the rest if it continues on down. That may be how I should have played that, but, you know, oh well, didn't really work out. Now, this chart. These are all the NASDAQs, by the way. They're just different time frames. The last two, this one and the previous one, were 15 minutes, and the first one was 60. So what I saw today, on top of my system hitting extreme, and I actually wasn't even awake for the open, the gap down. I mean, these gaps are just, this is getting crazy, right? And we may have a huge gap down tomorrow, but with all this talk about this Hindenburg omen, all this talk about, I mean, I don't even know why people are talking about the markets crashing. I really don't. There's not much fear in the markets from the standpoint of the put call, and really the charts aren't all that bad. You know, take a look at this chart back at the Nasdaq 60 minutes. Today's low and yesterday's are essentially finding support at the July 1920 area. This isn't even anything out of the ordinary. People are making these last couple of days out to be a lot worse than they really are. And that's kind of making me think that maybe we are going to have a couple days upside, a couple days of nice upside, is because everybody is so bearish. Maybe I'm wrong. Maybe I'm totally misinterpreting this sentiment, but I don't really look at everything that everyone else does. So that's kind of what I'm thinking. Coming back to this chart, you know, we're seeing some divergence on the some positive divergence on the RSI. It's finding higher lows while the market was finding lower lows. That's a good sign. Yeah, we're still trapped inside this 20 to 60 range, but you know, at some point the market's gonna bounce. And you know, I don't normally buy long when my signal gives a it's still in a bearish mode, but yeah, I'm taking a little bit added risk, and I just wanted to explain my rationale behind that. Okay, tomorrow and Wednesday should be interesting, so see how it goes. Talk to you guys later. Bye.